Thank you all for having me. It's great to be here. I want to thank Congressman Nolan also for being here. One fun part of my job is I get to spend some time with our elected representatives in Washington, D.C. So I go back to Washington 8 times a year for our FOMC, Federal Open Market Committee meetings, and I usually try to take an extra day and visit with our elected representatives, and getting to know Congressman Nolan has been a real pleasure for me. I remember our first meeting. He's a very, very gracious gentleman. Our first meeting, he said that this is his second stint in Congress, that he'd never had anybody from the Federal Reserve call on him before. And he appreciated, and I said, wow, shame on us for not getting out there and letting them know what we're doing. And so thank you, Congressman, for being so gracious as I visited you and sharing your insights on the region. Let me just spend a couple minutes talking about the Federal Reserve and why I'm here, and then I want to open it up to Bruce and to all of you. So 100 years ago, Congress created the Federal Reserve System, but they said they don't want to keep all the power concentrated in Washington, D.C. They want to distribute the power all across the country. So they created this unique structure in America where we have 12 regional Federal Reserve banks, and we have a board of governors in Washington, D.C. So Bruce mentioned, I am the leader of the 9th Federal Reserve Bank, the Minneapolis Fed, and our jobs are to represent all of you. Our jobs are to know what's happening in the regional economy. That's Minnesota, North and South Dakota, Montana, the Upper Peninsula of Michigan, and northwestern Wisconsin, and be very informed about what's happening here, and then bring this information back to Washington, D.C. when we set monetary policy for the nation. So the reason I'm here is I'm here to share with you what we're focused on and what we're working on, but I'm also here to learn from you about what's happening in the local economy, what are the challenges you're seeing. I really appreciated the students' presentations. The last one, she talked about what's happening in the workforce, what are businesses doing. These are really important insights for us to take back. And so I really hope that you'll be candid and direct with me about what's happening in your businesses with your employees so that I can learn from it and take this back to Washington, D.C. Now, big picture, monetary policy is a big part of our jobs. Right now at the Federal Reserve, we're trying to figure out how fast is the economy growing? Is there risk of it overheating? What's happening in the labor market? A big debate that we've been having for the 2 years that I'm in at the Fed is how much slack is in the labor market. So how many workers are available? If you look at, since 2009, the headline unemployment rate that gets a lot of attention in the paper, it's fallen from 10% to 4.1%. That's really good. It's low. But usually you would think as the job market has tightened, you would think that that would lead to high wage growth. It has not. We've been surprised at how low wage growth has been. And at the same time, as the unemployment rate has gone down, the job market has stayed strong, and all of these people have been coming out of the woodwork taking jobs. That tells me that our headline number, that 4.1% number, probably is not a very good measure of how tight the labor market is, because the 2008-2009 recession was so traumatic, it pushed a lot of people out of the labor market altogether. And so literally there are people who 1 month answer the survey and say, I'm unemployed and I'm not looking for work. I'm disabled, I'm retired, I'm just not looking. And then the next month they have a job. Well, that's not supposed to be how it works, right? If they're not looking, how do they get a job? And so we are always looking for different measures to try to assess how much slack is in the labor market, because that then will guide us in terms of, is the economy running at potential, below potential, or above potential? And then what does that mean for interest rates? And so when we have our Q&A and our discussion, I really love to hear from you. The unemployment statistics that we saw suggest that the labor market is very tight here, but how tight it really is it, right? Are wages going up? And so this is part of the discussion that I would love to have. So I've talked enough. Let me turn it over to Bruce, hear what's on your mind, and then we'll open it up to the audience and hear from everybody.
Sure. Well, I'll just start it off, and then if you would please raise your hands, for questions, so our runners can get the mics to you. So you talked about, and we've seen the fact that the unemployment rate is so low. There's help wanted signs all over the Twin Ports, and yet, the wage growth doesn't seem to be there. And so, what, in general, are your thoughts on why that wage growth hasn't caught up?
Well, a few reasons. So, when businesses tell me, and wherever I travel around the 9th District, almost everywhere I go, businesses say our number one issue is we can't find workers. And I always ask them the same question: are you raising wages? And usually the answer is no. And then I say, and I've said this many times, well, then you're just whining, right? You want more of something? You want more of something, but you're not willing to pay for it? That's called whining, right? And so get out your violins, because until you're paying more, I know you're not serious. And so then the question is, well, why aren't you willing to pay more? Most often, the answer I get is, well, we can't pass those costs on to our customers. We just can't pay more. Well, you know, if every business takes the same position, that we know we cannot pass these costs on to our customers, then no one's even going to try. And that, to me, as a central banker, that to me is an expression of anchored inflation expectations. If everyone believes prices are going to be stable, prices are going to be low, we have no ability to raise them, that then becomes a self-fulfilling prophecy. And if you look at Japan, we look at Japan to learn from, international experience. Japan has by any measure, Japan has a very, very, very tight labor market, like 2.5% unemployment rate nationally, something like that. But their wages aren't growing, and inflation is very low. And why is that? Because we think, after 20 years of low inflation, we think it has become embedded in Japanese society that inflation is going to be low, and there's nothing that they can do about it, and workers don't ask for raises, and businesses don't pay up. And so there's a danger that low inflation, too low, becomes embedded in society, and it becomes very hard to correct.
Hi, my name is Opeyemi. I'm from University of Wisconsin Superior. So my first question is, after looking at after hearing the presentation from our students on the consumer confidence, business confidence, as well as the GDP and stock performance, do you think that our findings match what you're actually seeing in the Ninth District and as well as the U.S. as a whole?
They do. We do hear a lot of boost in confidence. I've been surprised as a result of the tax cut that was enacted in December. It has led to a lot of enthusiasm. As I go around and I meet businesses large and small, a lot of people talk about, hey, things are looking better, we're excited about the tax cut. I think it's unclear what the tax cut effect is going to be on the bottom line for a lot of companies. I think they're still trying to figure that out. And I think it is as yet unclear is it actually going to lead to more investment. We don't know. I mean, we know that if the government spends more, so a tax cut is one way of juicing spending, because if businesses and consumers have more money in your pockets, you're going to spend some of it. So on the margin, it's going to lead to more aggregate demand in the economy. That's a stimulative measure. So the question not is, will it be a stimulus? The question is, what happens after that initial wave of stimulus wears off? Does it actually lead to greater productive capacity for the U.S. economy, greater investment? That at this point is unclear. So the optimism I agree with. Is it going to translate into a higher long-term growth rate? I think that's very unclear right now.
Bob Tamman from Sudan, Minnesota. I worked in the mines in my younger days. And so some of my neighbors are happy to see protection for our steel producers. But I also worked in some manufacturing industries, steel consumers. So as these protective duties play out, what do you believe is going to be the net result for the state of Minnesota and for the country in general when we protect steel producers at the expense of our steel consumers? Thank you.
Thanks for your question. I think if you look narrowly at the steel sector, the users of steel and the producers of steel, if you look narrowly at that question, I think it'll be a net negative, because we have far more consumers of steel in the country than we have producers of steel. But the question is, what is it going to mean for our free trade going forward across a range of industries? And so here I'll give you why this answer is complicated, and because the reality is complicated. For 20 years, in my opinion, we have been having very serious conversations with China, and China says, thank you very much, and then we're going to do whatever we want to do anyway. And so what I think the administration is trying to do is say, look, we have to show that there is some recourse, that we cannot just have one-way trade, free one direction, not free the other direction. The worst case scenario is this leads to a full-fledged trade war where everybody loses. We lose, China loses, the global economy loses. I mean, free trade is clearly much better for the global economy and for the U.S. The hope is that this back and forth leads to an opening up of markets and free trade and fair trade all around the world for U.S. products and exports. But I have no way of predicting what are the odds of these different possible destinations. And so it's somewhat of a risky game that we're playing as a country, but I have some sympathy for why we're playing it. All right, Amy. Yeah.
Hi, my name is Bill Bennett. I'm the CEO of an engineering architectural company.
Can you
here.
speak closer to the mic,
Oh,
please?
sorry.
Thank you.
So I'm wondering, I'm just looking at the map of what you're representing, and I'm curious as to, if you look at Dakotas, Minnesota, and Wisconsin, what are from your perspective, what are the best things that each state is doing, and what is the things that you think they need to change?
Well, it's hard for me to give an assessment individually, state by state. I think overall, we benefit from the fact that our economy is very diverse. Most major sectors of the U.S. economy are here, whether it's natural resources and agriculture, manufacturing, healthcare. They're all here, and that's good. And high tech, they're all here. And that diversity helps us so that when certain sectors are down, chances are other sectors are going to be doing better. So overall, that's a strength. The two challenges that I hear everywhere that I go around our region are, number one, workforce, which we should spend time talking about. Businesses saying they can't find workers, and then the conversation about why wages aren't going up. And then second, everywhere I go, I hear about affordable housing challenges. Everywhere I go. And whether it's a booming, the Twin Cities, or it's a rural community, and I've been scratching my head saying, how can this be a problem everywhere? And the best answer that I've come up with so far with our researchers at the Minneapolis Fed is that all of us are guilty of imposing lots of local regulations that raise the cost of housing. All of us. I live in a community in a western suburb where there are large minimum lot sizes, or you have to have a 2-car garage, or you layer on regulation after regulation after regulation, and it just drives up. These are well-intentioned, but when you layer on so many on top of each other, you end up driving up the minimum cost of housing, and it becomes unaffordable. And so we're doing a bunch of work at the Minneapolis Fed trying to look at this issue, but everywhere I go, blue district or red district, everywhere I go, affordable housing I hear over and over and over and over again. And I don't think it has to be that way. I was with a gentleman yesterday who was telling me that he moved here from Houston, and Houston, according to him, I got to go check the data. According to him, Houston doesn't have an affordable housing problem. They've got tons of affordable housing. I don't know if that's true. I need to go look at the data ourselves. But that's something that I think we all need to take a hard look in the mirror and say, hey, you know what? I might like my neighborhood the way it is, but I need to realize when we're all doing the same thing, it just drives up the cost of housing for everybody by limiting supply. And that's something I think we could all do better at. In the back.
Hey, Neil. Taking a step back on your employment situation. I've worked in manufacturing my entire life, and we've seen our wages in the last 3 years in our plants go from about 19, 20 bucks an hour up to about 28 to 30 bucks an hour. And the problem we encounter is skilled workers and education of our young. So I'm not so sure that when you talk about the employment, that is another problem that is not being addressed.
Thanks for your comment. So, look, I agree. Education is enormously important. Making sure young people have skills to be able to take these jobs, and it's only going to become more important. It can't just be, saddling students with more and more and more debt. We have to find ways of educating more and more of our young people. And it doesn't just mean a 4-year degree. It also means technical schools or associate's degrees, etc. But I'll tell you something. One positive thing that I've seen in the past 2 years, as the job market has gotten tighter nationally, businesses like yours and others in the room are now doing things you would not have done 5 years ago. You're taking workers, and the last student spoke about this, you're taking workers that you would previously not have taken, and you're training them yourselves. Or you're saying, you know what, I can broaden the job description, I can broaden the education requirements. You know what, maybe for this job, we don't have to do a drug test. Maybe for this job, we look at people who do have made mistakes and have a criminal record before. And I've asked my economist this question. Imagine if we tried to design a fiscal program that Congressman Nolan and his colleagues could legislate on that would motivate thousands of businesses to do these extraordinary things. It would cost hundreds of billions of dollars, maybe $1 trillion to try to motivate this behavior. Instead, with a tight labor market and a price signal being sent across the U.S. economy, we're now seeing thousands of businesses doing what's in their own interest, which is, you know what, I'm going to give this gentleman a chance. And I'm going to train this man or this woman to give them a chance to work in my business. That's a profoundly positive move for the U.S. economy as a whole. and it's being driven by the free market. And so I hear what you're saying, but you know what? If you need to train them yourself, then you need to train them yourself. And I wish I could tell you that there's a community college that'll just put out a pipeline, and I hope we get there to give you the workers that you need. But we train people at the Minneapolis Fed. Every job that I've had that's been a new job, I've had to learn on the job. You know, that's part of an economy.
Hello, my name is Tamara Lowney. I'm with APEX, a regional economic development organization in Wisconsin and Minnesota. We work directly with many of these communities across all industries, and I appreciate your comments on both the wage and some of the different practices that people are taking to encourage more into the workforce. What I'd like to hear about, though, is how you feel about the status right now on immigration, how we're going to be able to benefit or not benefit in many cases on some of the things that are happening on a national level, especially in some of our rural areas in Minnesota that just depend heavily on J-1 and H-2B visas for their businesses to survive.
Yeah, thanks for your question. I have spoken out about this. I wrote an op-ed on immigration. So if you look at where economic growth comes from, it comes from two things. Half of the equation is productivity growth, so technology development and more education, so workers have more skills, like the gentleman was talking about the skills. The second half of the equation is simply population growth. More workers to produce things, more consumers to buy things. And the fact of the matter is, our population growth has slowed a lot in recent decades, simply because we're having fewer kids. And this is not unique to America. This is happening in advanced economies all around the world. Our population growth rates are slowing because our fertility rates have gone down. Families are having fewer children. So we have three choices, and this is just math. I'm not offering you a moral judgment. You can decide for yourself. Number one, you can accept slower growth. Number two, you can try to subsidize fertility. And usually people laugh when I say that. But you can do it. Japan is trying to do it. They're offering tax credits and free childcare to try to get their families to have more kids. It's not a quick solution, right? Or number three, you can embrace immigration. And that's it. Those are the math. Slow growth, accept slow growth, subsidize fertility, or embrace immigration. That's it. So we as a country have to decide which of those three we want. I'll tell you what I would vote for. I'd vote for an immigration policy that feeds the needs of our economy. And I think that we have a huge advantage in America that immigrants want to come here. The reason that Japan has to go for the subsidized fertility route is because they have a culture that does not welcome immigration. So immigration is simply not an option for them. And while we may not be perfect at it in America, we're better at it than just about anybody else. And we have a huge economic advantage because immigrants want to come here. So for me, if I were king, I would design an immigration program that feeds the needs of our economy, right? Get the rural communities that you talked about that need the workers, maybe it's to work in meat processing plants or work on farms, as well as the high-skilled workers to work in our factories and our high-tech areas. That's how I would design it. It's not up to me. But I think that that's a no-brainer for the U.S. But it's a choice we have to make. Other questions? Or turn it over to Bruce.
Is there such a thing as deposit and money multiplier for local community banks? Can we calculate it?
Well, the local community banks are part of the banking system, just as the big banks are. And so they're all part of the credit creation process. So I don't think that's any different for a local community bank than it is for a big bank. I do think that local community banks have been hamstrung by some of the regulations that are trying to address the risks of the big banks. And so personally, our view is that we've done in the Minneapolis Fed is we've said we need to be much tougher on the big banks, which are still too big to fail, but at the same time relax some of the regulations that are smothering community banks so that they're more on a level playing field.
Hi, Neel. With Jerome Powell recently taking over as chairman of the Federal Reserve, how do you see that change in leadership impacting our region?
Well, so the lady asked a question about our new Fed chair, Jerome Powell. So Janet Yellen, her term as Fed chair ended in February, and President Trump appointed Jerome Powell, or we call him Jay Powell, to succeed her. He's our new chairman of the Federal Reserve. I think Jay is an outstanding choice. I think Jay is an excellent public servant. He's been serving on the Board of Governors for 4 or 5 years, has done a very good job, and I think he'll do a great job as Fed chair. I don't see it leading to big changes. I mean, each person has their own unique style, et cetera. I think that Janet Yellen's predecessor, Ben Bernanke, took important steps to improve the transparency of the Federal Reserve. I think Janet did what Ben did and took it even further. And my expectation is that Jay Powell will take that yet further as well and be more open and transparent to the public in terms of what we're doing and why. So I think in that sense, it's going to be another positive step forward, building on Janet's legacy. Other than that, at least so far, I don't see big departures in what Jay is planning to do or Janet. But it's really going to depend in part on how the economy evolves and then how they end up responding to it. So I think it's probably going to be mostly continuity.
This is a little bit dated from a couple of years ago, but I read that the Department of Labor estimated that 34 million Americans will never be able to afford to retire.
Can you put that closer to your mic? Thanks.
A little bit dated. Oh, there we go. A little bit dated, but the Department of Labor estimated that 34 million Americans will never be able to afford to retire. I wonder what your thoughts are about that, both as far as implications, as far as employment costs, workers' comp, health care, productivity, and just general impact on the economy.
Well, I think that I think we're going to all work longer. Those who are healthy enough to work are going to end up working longer, and we're already seeing it as the economy has gotten stronger. You know, again, one of the students talked about labor force participation, and we look at it as well as labor force participation for the country, and we know that society is aging, so you would expect it to decline. And then we look at labor force participation of working age adults. Well, labor force participation for the country, it's on a downward trend because of aging, but it has flattened out the last few years. And in part, that is because older Americans who we would have thought would have retired have chosen to keep working. That's what's going to happen, because people are going to have to work if they're able-bodied enough to do it. And I don't think that's a bad thing. I think work is good, and people working and choosing to work. I mean, these are folks who are choosing to say, you know what, I'm going to stay in the workforce because I'm earning a wage that I like, and I'm going to keep doing that, and I'm better for it. So I think all of us are going to face economic reality, which is Americans are going to work longer. And as we are, you know, you think of it this way, as healthcare has gotten better and people are living longer, that doesn't just mean extra years of lemonade and golf, right? That means that, guess what? We have to pay to sustain our lives, to put a roof over our head, to put food on the table. People are going to end up working longer. And I don't think that's necessarily a bad thing.
Hi, my name is Rachel. I'm a senior at UMD. And at our last REIF breakfast, we talked about the importance of water in the economy of the Twin Ports and REIF region. And I was curious, what are the economic implications if we continue to abuse our freshwater resources, whether that be improper agricultural drainage, transfer of invasive species, or, you know, unnamed companies dumping toxic chemicals into the groundwater in Oakdale? But, you know, just what are implications for the 9th District?
I'm guessing you know the answer to the question, the way you posed the question. I mean, clearly, you know, preserving our natural resources is enormously important, and that's why we have the Environmental Protection Agency federally, and we also have state agencies as well. And so, I mean, I think that the groundwater is enormously important for the state, for all of us, drinking water, et cetera, as well as for agriculture. So protecting, you know, having an economy that we can have strong economic growth and economic vibrancy, and at the same time being responsible stewards of the environment, I think that's something I would argue we all think is important.
Bob Tam in Sudan. The state of North Dakota has a state-owned bank, and once in a while I hear murmurs at the Capitol about Minnesota should have a state-owned bank. And I'm curious if the Federal Reserve has any position on that proposal.
Well, it isn't, so this is purely the domain of fiscal policy, which is how the state chooses to finance its investments and its projects. It is not obvious to me, so I'm neither strongly for it or strongly against it. It isn't obvious to me what the advantages are. So states already have the ability to go and issue debt. Communities go and issue debt to fund their capital investment projects. I'm not sure why a state bank makes that process easier or better. That just isn't obvious to me what the advantages are necessarily. So I'm not against it, but to me it just feels like another way that the state taps private investors to raise money to fund these projects. States already do that. So what is the advantage? That just isn't obvious to me. So I'm not strongly for it or strongly against it.
Hi. I was hoping you'd describe a little bit more of the details of the Minneapolis Plan and what you see as maybe the future of the plan.
Sure. Thanks for the question. So the Minneapolis Plan is the plan that we've put together on ending the problem of too big to fail. So we had the terrible financial crisis, and part of what made the crisis so damaging to the U.S. economy was that you had these giant banks, these mega banks in the center of the economy that basically had a big heart attack and were on the verge of collapse. And so even though we hated having to do it, we had to use taxpayer money to go in and bail out the banks to stabilize them so they didn't bring down the whole U.S. economy. And we really felt like instead of the Great Recession, we could have been facing the Great Depression. Instead of 10% unemployment, maybe we would have been seeing 25% unemployment. That's how dangerous the situation was. So we spent 2 years at the Minneapolis Fed bringing the best experts in the world to share with us their ideas, looked at all of them, ran the analysis, and concluded that the best way to stabilize the bank so that this can't happen again is to roughly double the amount of equity that they have as the buffer against their mistakes. So let me give you an example. When my wife and I bought a house in Minneapolis, the bank that we got a loan from made us put 20% down. So why do we put 20% down? That 20% down is designed to protect the bank in case we run into hardship. Because they can take the house, they can sell it, get their loan paid back, and they have a little bit of a buffer there to cover their losses. Well, big banks in America only put about 10% down on their investments. It's really that simple. If we made the biggest banks in America put 20% down on their investments, we could largely address the issue of too big to fail, because that 20% would be there to protect taxpayers in case banks run into trouble. That's the simplest version of what the Minneapolis Plan is. We also have a lot of other detailed issues around relaxing regulations on community banks, among other things. So we've put out the plan. We just finished it in December of last year. But we also know the regulatory winds are blowing against us. Right now there's a wind of deregulation blowing in Washington, D.C. So I wouldn't say I'm optimistic that this is going to move anytime soon. But we are trying to equip legislators with the information that they need so that if they really want to address too big to fail, here is a plan that will do it. And, this is like I compare the biggest banks to nuclear reactors. If a nuclear reactor melts down, you all know intuitively it's devastating for society. So what happens? If a nuclear reactor gets into trouble, government will spend whatever it takes to try to stabilize that reactor because the consequences of the community are so profound. Well, same thing with a giant bank. So we could either outlaw nuclear power, which we've not done, or we regulate it so that it's safe. I'm saying let's do that for the biggest banks in America. Let's make sure that they have enough capital that they are safe and sound and the taxpayers are protected. And that's the nutshell what the Minneapolis Plan is.
Good morning. About 10 days ago, there was an article in the Duluth News Tribune about how the area in particular is kind of an island of no population growth. And in the greater region, there's far more substantial population growth, and that was corroborated by some of the evidence we saw in a presentation earlier. So what are the lessons to be learned, or what are the fundamentals? What could be applied from those areas to this area to start to reverse that trend?
Well, so this is another common concern that I hear when I travel around our region. So it's not unique to this, especially in smaller towns. They're losing a lot of their young people, and they're worried about what does the future hold. So there's no magic answer, but I'll tell you what I've seen in some towns some communities that are doing a better job. They're trying to make the local economy as supportive for business growth and entrepreneurship as possible, number one. Number two, they try to bring amenities to the local communities so that young people want to come back. Maybe they go away to college and then they come back to try to start their families because they like where they grew up and they want some local amenities. So that's a second factor. And the third factor is immigration. Some communities have done a much better job of recruiting immigrants from around the world to come and settle there. And they're actually seeing their population grow as a result of that. And so now the question is, is that a strategy that the local community will support? But I'll tell you, if it's done well and the local community supports it, you can actually have strong population growth feeding the businesses that say they can't find workers because you're bringing them in from around the world. So those are the three things that I have seen some communities do a better job of. And others, It's a fact that's been going on in America for probably 100 years. People have been migrating to cities, and the hollowing out, so to speak, of rural communities is probably going to continue unless you're able to take some of those factors on.
Good morning, Neil.
Hi.
Thanks for coming to Duluth. My question is about the interest rate cycle that we're in right now. Do you feel that we're in a policy normalization sort of event here with the Fed, or have the underlying economic conditions changed such that warrants sort of a different directive? If we think back just a couple of years ago, the signaling out of the Fed was sort of a slow and gradual, rate move, when eventually it was time to move rates. And we've seen 5 rate moves in the last year and a half, with the signaling of 3 more possibly this year, which would imply that Fed funds would be close to 2.5% or so, in an environment where the longer end of the curve is sort of signaling, maybe a little bit different story. And ultimately, we may find ourselves in a pretty flat yield curve environment, which would be pretty restrictive to economic growth. So I was just curious about your opinions about that.
Sure. Well, this is an active debate that we're all having right now. So let me share with you a concept that we talk a lot about at the Fed. Something that's called the neutral interest rate, the neutral real interest rate. This is the interest rate that balances savings and investment in the economy. And the way we think about it is, if we're at neutral, then we're neither providing stimulus nor tapping the brakes, just letting the economy run in a steady state. Now, the tough part is we don't really know where neutral is. We don't have a scientific way to measure what is the neutral interest rate. We have models, and we have estimates, and we have judgments. We're not exactly sure. So if you say inflation right now is around 1.5 to 1.7%, the neutral real interest rate, so interest rates net of inflation, I think we're pretty close to neutral right now. So from my view, it isn't clear that we need to raise rates much more to try to even things out in the economy. Now, some people think the neutral rate is higher than where we are right now, and they would be saying, well, no, we still have a ways to go to get back to normal. We no longer need to provide stimulus to the economy. So the honest answer is there's a range of estimates, and we're not exactly sure. And that's what makes monetary policy both interesting and hard, is there are a bunch of stuff that we can't physically measure. Like we do not have a good measurement of how much slack is in the labor market. We have to try to estimate it. We don't have a good measure of, is the economy running above potential or at potential? We have to try to estimate it. And we do not have a very good measure of, this is where neutral is. We have to try to estimate it. And so I think some folks are saying we need to get back to neutral. I'm saying we're probably pretty close to neutral right now, but there are judgment calls. And I agree with you. You can look at the yield curve and what the long end of the yield curve is signaling to us as one piece of information that we do incorporate into our thinking. And so, look, I know everybody on the committee, we may have a range of policy views. Everybody on the committee wants the expansion to continue as long as possible. Everybody's united in that. And now we're just reaching different judgments about where we are in terms of these various measurements.
Good morning.
Good morning.
I'm Pam Kramer. I'm with Local Initiative Support Corporation in Duluth, and we work on building healthy communities. And in the student presentation, they identified the need for affordable housing. And certainly in Duluth, we've highlighted that in our comprehensive plan, that we have a shortage of affordable and workforce housing. Do you have ideas or tips on how we can help to stimulate that?
Yeah, so this is something that we're looking at the Minneapolis Fed. I'll tell you this. Every time I see a state legislature or the Congress allocate some more dollars to subsidize building affordable housing units, it feels good in the short term, but it's almost like they can never keep up with the demand, right? Somebody allocates X dollars, and then there's demand for 10x more. And so somehow we have to come up with a solution that allows the market to build these homes and these units for workers who have jobs that want to be able to pay rent or buy something, to be able to meet their needs. And so the only answer that I have, which you're probably not going to find very satisfying, is to take a very hard look locally at what are the barriers to people coming in and building multifamily units to meet the needs of these workers who do have jobs. Again, these are folks who have jobs, who want to be able to afford a place to live and just can't afford something. I saw a story the other day, a few weeks ago, that said that, and I'm going to get the anecdote maybe not exactly right, but I think Seattle, for the first time, rents are going down in Seattle. And according to the story, I haven't investigated it myself, according to the story, Seattle had built 10 times as many units in the last decade as they had in the past 50 years. And it's magic. A ton more supply comes in, price goes down. And so I would just encourage all of you to take a hard look at what are the local barriers to people coming in and building more units, and try to eliminate those barriers so that if you add more supply, it will have an effect on price. And other than that, you're going to be in an endless cycle of trying to find more subsidies of taxpayer money trying to build affordable housing units. And my experience is you'll never be able to keep up with demand for that. I'm not discouraging you from doing it, but that by itself is not going to be a long-term solution. My opinion. Hi.
Hi, Mitchell Blomberg, a student at UWS. And so my question is, what can we do to help the foreign exchange students who have come to the U.S. for school but struggle to find businesses that are willing to sponsor visas after graduation? And could this be a possible solution to the labor shortage in our area?
Well, there's a couple dimensions to your question. So one is, I think a lot of people in America agree that, first of all, the idea that we bring students here to get a great education and then send them home is insanity, right? So let me start there. That's crazy. Number one. So that speaks to needing some national immigration policy to try to address that. Then second, though, if businesses really are short of workers, and here's a skilled worker that a business has the ability to sponsor them for immigration. This is another example. If they're not willing to do it, then they're not serious about workforce shortages, right? If here's a worker that's a good worker that has the skills, but you need to pay a little more to go through an immigration process, then you're putting your money where your mouth is, so to speak, right? You're really not serious. It's very easy for businesses to say, I want skilled workers and I want them cheap. Yeah, who doesn't? But we live in a market economy. If you want skilled workers, you're going to have to pay for it. And if that means sponsoring somebody for immigration, so be it. If that means paying up to get them, then so be it. I asked a business, in a discussion like this, I asked somebody, businesses that were complaining about you couldn't find workers. I said, when was it good? When were you able to find workers? And they said, 2009, we could find workers, right? So from businesses' perspective, if we're in the middle of a full-fledged recession and there are workers available everywhere, that's a great workforce environment, right? That is not a good public policy outcome.
Neel, good morning, and thank you for bringing your insight up here to northern Minnesota. With respect to international trade, Mexico and Canada are our two most important international trading partners. Our current president speaks about the potential abolishment or at least the reworking of NAFTA. What are your thoughts on that potential, and how do you see foreign trade, especially with those two countries under NAFTA, and its importance to Minnesota?
Well, I think NAFTA is enormously important to the U.S. economy, enormously important to Minnesota's economy, and there are many complex supply chains going now back and forth between the three countries. And so we need to have the movement of free trade between these three countries. Can NAFTA be improved? I'm not a trade negotiation expert, so I don't know the details that they want to try to improve. I imagine it can be improved, and if it can be improved, by all means, improve it. But our trade with Canada and our trade with Mexico is enormously important, and we need to protect it and enhance it and encourage it.
Hi. I was wondering if the recent volatility in the financial markets impacts your committee's decision to raise interest rates more or less going forward in 2018, or if you're more focused on economic factors and indicators like inflation.
I think we're much more focused on economic factors of the real economy, like inflation and the job market, what's happening, than simply volatility in the stock market. The stock market goes up, the stock market goes down. I mean, we pay attention to it, but it's not what's driving us. We do look for signs of financial instability, something that could lead to an actual financial crisis. And I'll give you an example. So when the tech bubble burst in 2001, it led to a pretty minor recession, not a big deal. When the housing bubble burst, it led to the Great Recession and a financial crisis. Now, one of the differences between those two markets is housing has so much more debt underneath it, right? Maybe you put 20% down, or some people put 10% down or 5% down. That debt under the housing market is part of what makes it so damaging if there's a big housing correction as opposed to a stock market correction. So we do pay attention to these various different asset classes, movements, volatility, but I think we're much more focused on the real economy, what's happening to inflation, what's happening to wages, what's happening to the job market.
Good morning, Neil. Brian Hansen with Apex. Thanks for being here. One of your predecessors, Art Rolnick, was famous for his research and work around early childhood education and children as a way to really support a growing, equitable community. I know he was there for a while and he had some time to get some research done, but my question to you is there something that the Fed is working on and researching today? And do you have a theory or hypothesis on what we can do locally, not just at the federal level, but we can do locally that can encourage those same kinds of things?
Well, I appreciate you raising it. The Minneapolis Fed has a very proud and important history working on early childhood education, and that work continues. We have people at the bank who continue to work on it. And, you know, it's shame on me for not having talked about it yet. Just a year ago, we launched a major new research initiative that we call the Opportunity and Inclusive Growth Institute, trying to research why are there these huge gaps in our economy, racial gaps, regional gaps that lead to very disparate outcomes, and how do we have an economic growth where we can tap into everybody and give everybody a chance to participate in that. Again, it's racial is one dimension, but it's also regional that we're looking at. And so, you know, I've been surprised how little we understand about some of the root causes of these issues. And so even if we at the Fed don't have the tools to solve the problems, if we can do the research and then equip other policymakers, local legislators, state legislators, national legislators, give them the data and the analysis, then they can take it forward. Now for you, here locally, I mean, I think you put your nail on the head. You hit the nail on the head, which is we know education is enormously important. And so what are the local policies to try to make sure that all the young people in this community are able to get a very high quality, whether it's early childhood education or a great K through 12 system or pathways to different types of higher education. All of those are enormously important. I don't know enough about the local education system here to know, but I think that, I mean, all of you are here today. You obviously care about the local economy. You care about the region quite a bit. I mean, I think all of your participation to make sure that we're not leaving people behind. It's in your own interest for your own businesses to feed your businesses. I think that all of your participation is important. But I'm happy to chat with you afterwards to hear what you all are working on. Thank you.
Hi, my name's Dakota Rice. I'm studying econ at the University of Wisconsin-Superior. My question is, how do you see the recent regulations on the imports of steel affecting our taconite industry in the region?
Well, I'm guessing the local regulation of steel will be net positive for the steel supply chain here in the region. So on the margin, I would say it's probably a net positive locally. Again, the question is, to the gentleman's question earlier, what is it going to mean for the national economy? I think that's less clear. Again, in America, we have more steel users than we have steel producers. So just looking narrowly at that, it's hard to see that the jobs that are created as a result of the tariffs are going to outweigh the jobs that may be negatively impacted. But the bigger question, which I can't estimate, is what is it going to mean longer term if you play this game out, this negotiation strategy out? What is it going to mean longer term for U.S. exports? That is very unclear. We certainly have to avoid a trade war. But if it actually ends up being a way to open up markets, that could be a net positive over the long term. But again, it's hard for me to estimate.
So my question is what do you see as the impacts on the region of changes in the healthcare regulation?
Impact in the regions on changes in healthcare regulation. Well, I think it's unclear. I mean, clearly, workers who benefit by having healthcare who did not have healthcare before are obviously better off. Is it going to lead to? Is it leading to more part-time work as opposed to full-time employees as businesses try to avoid some of these? That's certainly possible. You know, we at the Minneapolis Fed. So I'm shifting gears just slightly, but it's going to be related to your question. Minneapolis has enacted an increased minimum wage. It's going to be going up to $15 an hour over several years. And the city of Minneapolis put out a request for researchers to study the economic effects of increasing the minimum wage. And we're pleased that they chose the Minneapolis Fed to do that research. So over the next 8 years, we're going to be studying what are the effects of increasing the minimum wage. And we're going to do it honestly, right? We're not going to cook the analysis. We're just going to do it dispassionately and let the results speak for themselves. But you would think, intuitively, when you raise the minimum wage, and the reason why this is related to healthcare, if you raise these benefits, some people clearly benefit, right? If you're a worker and your wage goes up, you benefit. But if at the same time it means there are fewer jobs available or people's hours are cut, then maybe some people are hurt by it. And so I think the same thing can be said for healthcare. It's complicated. Clearly some people are going to be better off. But what is the overall effect on families? What is the overall effect on communities? I, for one, don't yet know. And I think, for me, it's too soon to judge. But I can see benefits, but I can also see possible unintended consequences.
Good morning, I'm Betsy
Morning.
Hill, and I work with the City of Duluth Workforce Development, so it's wonderful to hear the focus on workforce. We are the local recipient of Workforce Innovation and Opportunity Act funding, and which can be used by businesses to fund on-the-job training, apprenticeships. What I'm wondering is if you're seeing areas that are really maximizing the benefit of this funding with businesses, and if so, if there's any strategies that we could employ locally.
You know, I just hear anecdotes that lots of people are trying things, and I have not heard anybody who says, I've never met somebody, some region who says, we've got this nailed, that we're doing a great job, and there's a great pipeline helping workers retrain to feed our businesses. Usually it's businesses complaining they can't find workers with skills. At the same time, I'll go to another meeting of workers who say, you know, we're stuck in part-time jobs and people aren't willing to hire us. And so I think the work that you're doing is enormously important, and it's just, again, when businesses are serious, they will be more willing to give folks a shot and participate in your programs. Again, I know it probably sounds like I'm beating up on you guys, but I hear this all the time. What people are really saying is, we want skilled workers cheap. Well, you know what? It's not Christmas. So you can't just have what you want. You're going to have to work for it. And that means partnering with agencies like yours to try to get those workers into their businesses and participate in the training so the training is as relevant as possible. Hi.
Hi. I have a question about agriculture. While agriculture is not a major driver of this REIF economy, we all do eat. And as I look at the geography of the Minneapolis Fed, it includes some very strong agricultural areas. Could you please comment on the current agricultural trends as well as what you see coming for the future?
Well, the ag sector broadly, and ag is a big, ag encompasses a lot. So it's hard to say there's one ag sector. But ag, broadly speaking, has been under a lot of pressure just because of crop prices have been low for a long time. And most farmers that we meet with and most banks that do banking with ag businesses say that farmers, generally speaking, are well capitalized and they've been conservative, so they're not seeing a crisis on the horizon. But if the low ag prices stay low for a long time, it's just going to keep putting increasing pressure and forcing more consolidation, where the stronger, the better capitalized ones will be buying out the lower ones. I mean, they're producing huge harvests, generally speaking, so that's also contributing to low crop prices. So, you and me going to the grocery store, that helps us be able to get food relatively cheaply, but it isn't helping the farmers, the low prices. Is there something else you were getting at?
I guess that I see a lot of tension in the agricultural community, and it is very diverse. We have large producers, small producers. There's also variations between dairy crop, and specialty farmers. Sure. And I believe there are struggles out in the agricultural community that probably, you look at macro trends, and I agree, the folks that are well capitalized are in fine shape. They can weather the storm. I think there's a lot of concern in local communities about the farmers that don't fit that mold. And as you indicated, then the larger capitalized ones buy out the smaller, which is the free market.
I'm with you, exactly. And so we do pay more attention to the macro trends, but we do absolutely hear those stories and meet with those folks. And as you said, that's the free market. And, it's like people lament the number of community banks has been declining. It's been declining for decades. And it's been declining for a lot of different reasons, including one recent one that bankers are talking to us a lot about is just the cost of technology. So, for example, I have a bank account at a big bank. I never go to a branch. If someone gives me a check, I take a picture of it on my iPhone, I deposit it that way. I do all my banking online. Most of my utilities are auto pay. Those are great features and services for me. It's a lot harder for a little tiny community bank to offer that level of service than it is for a big bank. And that's not going away. Those pressures are going to increase. And so, as you said, it's a free market and those pressures are going to be with us.
Good morning, Neil.
Good morning.
Kevin Kangas with the Natural Resources Research Institute, and hopefully this is a fun question for you. As we increasingly move towards a cashless society, I'm wondering if FedCoin has any plans to join the likes of Bitcoin in the development of its own cryptocurrency, or is the intention to just rely on the blockchain technology that's been developed to make the banking system more efficient, charge us fewer fees so that we can transfer more money to our bottom lines and hire more people or pay them higher wages?
Well, I get a lot of questions about Bitcoin and cryptocurrencies, and people sometimes ask about something like a Fed coin. Would the Fed issue its own cryptocurrency? And I don't mean to be glib. I don't even know what that means, right? Because think of it this way. Let's imagine that as I just said, I do most of my banking transactions on my iPhone or on my computer. So those are not Fed coins, but my dollars are electronic. So what's the advantage? What is the difference in the Fed issuing a virtual currency than if you and I just transact in dollars electronically to one another? I'm not sure what it means then for the Fed to issue a cryptocurrency. The only difference is if instead of me having a bank account and you having a bank account, we have this blockchain and all of our accounts are simply on the blockchain and we're transacting with each other on the blockchain. Maybe there's an advantage to that. It is not yet apparent to me. And certainly the costs of that so far are nowhere near competitive with the scale electronic transactions that we can conduct today. So I think we're at the earliest stages of figuring out if this crypto stuff has any value, if there's any usefulness to it, or is it just like a fidget spinner? Who knows? And it may be a decade before we figure out whether or not you've just invested in fidget spinners or you've actually invested in something useful. And I've said this a lot previously, is the big limitation, the big weakness of cryptocurrencies is that the barrier to entry for new types of cryptocurrencies is zero. So right now there are 1,500 or 1,600 individual types of cryptocurrencies out there. Literally, there's something called banana coin, right? I call them clown coins. And as there are all these clown coins that are being introduced, it actually undermines the confidence in the whole ecosystem of cryptocurrencies that are out there. Because how do you tell them apart? And so what makes the government money valuable is the fact that we have a monopoly on creating it. Because if you go in your basement and you start printing dollars, the Secret Service is going to come knock on your door and put you in handcuffs, right? Literally, that's what makes the dollar uniquely valuable, because the U.S. government is the only one allowed to create it. Same thing for the Eurozone, the euro, or the pound in England, or the yen in Japan. So until there's some way of filtering out the nonsense, I don't see where cryptocurrencies, where they can go. And Congressman Nolan has a question. Or go ahead, this gentleman, then Congressman Nolan.
Hello, my name's Ron Brochu. I'm with
Can you
Business
speak up, please?
Sure. When you talk about not paying enough to get workers, are you saying that business owners are expecting profits that are too high, or that they should live with slimmer margins, or that it will pay off in the long run?
Well, no, I'm not making a comment about your business model or your profits. I'm simply saying when businesses say, we want more skilled workers, what they're really saying is we want more skilled workers at low wages. We want them cheap. Well, you know what? Everything that I buy in my life, I wish I could pay less for it. I get that. But I'm just telling you, in a market economy where there's a free market for labor, if you want more of something, you're going to have to pay more for it. And so for me as a monetary policymaker, I'm trying to assess supply and demand in the job market. Is there still slack, or is inflation on the way? So if I want to assess supply and demand in a market, I start by looking at the price, the clearing price in the market. Well, the clearing price in the labor market is wage growth, and wage growth is low. That tells me businesses aren't feeling that big of a pinch, because if you really were feeling a pinch, you'd be paying more and people would be re-entering the job market as a result of that. Congressman.
First of all, I want to thank you for your engagement with the greater community, your outreach. We've never seen anything quite like that from the president of one of the Federal Reserve banks, and we're grateful for that and much appreciated. Also like to thank you for your bold leadership on the board, having been the lone dissenter on occasion with regard to rising interest rates, much appreciated, and your candid assessment of the congressional, quite frankly, failure to provide the community banks the kind of relief that they need, and correspondingly the need to crack down on the larger banks. So having said all that, I want to thank you. Your leadership has been greatly appreciated and remarkable, and we're grateful for it. I would also like to just make a brief statement, and followed by a little question, because we've had a lot of question about steel prices and tariffs and mining. And I've been quite surprised how the president called for a 25% tariff on steel, whereas prior to this, community leaders here in this region convinced the Obama administration to crack down on cheap imported steel products. And we saw tariffs as high as 525% against cheap steel from China, cold rolled and hot rolled and corrosive resistant. And nobody in the world said a word. But what happened was that at a time when the mines were shutting down and thousands of workers were being laid off, the price more than doubled, and the mines all opened up. All the miners came back to work. And here's the point that I want to make. Recent economic assessments of our region here have said that the employment rate is the highest that has been in 30 years. And that was largely attributed to the jobs in mining and all the engineering and construction related services, manufacturing and logging. And I would just like to make the statement that without that, this region's economy would be in serious steep decline, because the other sectors of our region have been struggling. So when you're talking about things like tariffs and steel, there's not only the employment and the overall general economic effect on a particular region. Some of the other factors that I think need to be considered are what is the value of a particular industry to the country's foundation for economic growth and success, as well as what is the value of a particular industry as it relates to our national security. Because many of us in this region are rather proud of the fact, and sometimes brag, maybe not totally correct, that, you know, as our mining and steel industry that won World War II. And that it still remains very vital to our national security, which is why we have military protection at Sault Ste. Marie to get our iron ore into the Great Lakes. So I'd like you to respond. How is it that sometimes these factors are not considered at the highest policy levels? And then secondly, how did we manage to put, I know how we managed to put 500% tariffs on cheap subsidized imported Chinese steel. How come nobody said a word? And the president comes along with a 25% increase, and my God, the world is collapsing and a great chaos. If you'd respond to that, but most importantly, I want everybody here to realize the important role that mining plays in our region, and without it, we'd probably be in a rather steep decline. But most importantly, thank you for your bold leadership at the Fed, and I hope the Congress rises to the challenges that you have offered to us. Thank you.
Thank you, Congressman. I'll say, first of all, I agree with you completely on the importance of steel to our national security and our economic vibrancy. So I wholeheartedly agree. The earlier comments I made, when we analyze at the Fed, so I'll just be candid, when we analyze the economy, we're looking at through the lens of purely of economics. We're not making judgments about this sector is important, more important than that sector, or this sector is not. We don't feel like that's our role. Our role is to try to just assess what's the U.S. economy on average going to do over the next several years, and that guides us in the course of monetary policy. But I think those judgments are absolutely the domain of Congress and the executive branch to figure out, what's important for the U.S. economy over the next 30 or 50 years. And so that makes sense. But I don't know, where'd the microphone go? I mean, I'd like to ask you, why do you think the environment around the tariffs is different than what it was a few years ago, and why has there been such a big reaction? I mean, I think you're in a much better position to judge that than I am.
Well, I can tell you why it's important to us here in this region.
Well, I know that, but why do you think you asked me the question of when President Obama did something, nobody said anything, and now President Trump has done something more minor, and everybody's reacting to it. Why do you think that is?
I think it's because all across the nation, we have seen a decline of manufacturing and the movement of so many of our fundamental manufacturing operations being moved overseas to a wide variety of different places, everywhere from China to Mexico. A decline in wages, a decline in pensions, a decline in health care, and a decline in what we would call real living wage job opportunities. I can't tell you, a big district like this that I've had the great privilege to represent. I stop at convenience stores to fill up the tank of gas, oftentimes going here to there. And I always ask them if that's their primary job. And they always say, no, I have another job. And I've heard it said, it's a good thing we've created so many jobs in our economy today because you need 2 or 3 of them to make a living. And there's been a general sense that it has been these trade policies that have benefited the transnationals and the multinationals, but not to the benefit of the American working men and women throughout the country. And I think the president resonated with people when he said, we've got to bring manufacturing back here to America, especially in areas that are so vital to our national security and our economy. In this case, up here, mining. So that's why I think there is this concern. And of course, the big banks, the multinational community, they want unfettered free trade. And people here, I hear all the time, you can't always go to the lowest common denominator. We've got to pay Social Security and Medicare and pension and health care and living wages and environmental rules and regulations and health and safety regulations. Of course, it's cheaper to get your product from someplace else that doesn't have to comply with all that. But it's costly. So let's have trade, but let's make sure it's fair. And that's a message that seems to be resonating, I think, all across the country with a lot of people. And the president has tapped into that, and that's a part of why he got elected president.
Thank you. Appreciate your comments. All right.
I think we should wrap up.
All right. Thank you very much.
Let's all give Neel a hand.